Good afternoon, everybody. Welcome to your Tuesday edition of the TraderMerlin Show, the calm before the storm, the day before Jerome Powell takes center stage and makes an announcement that's going to make these markets move wildly one way or another and maybe give us some clarity as to what the whole situation looks like. So welcome to the TraderMerlin Show. If you are new to the show, hit that subscribe button. Of course, I'm pretty sure most of you are all regulars out there, so hello, everybody. Today's show topic, actually, as you saw the graphic there, understanding order routing is really derived from a viewer question that came through on a trade that apparently went against her and had something to do with order route. So I thought, you know what, let's go back to fundamentals and look at some of the big picture pieces on limits, markets, conditional orders, bracket orders, OCOs, and things like that, and really kind of what happens to those orders when they're sent out to the marketplace. Now, before I get into that, I'm going to just look at the markets real quick to start. Not looking pretty, as I saw in the chat, really kind of flat. You know, volume was lower than normal, just kind of a flat, lowish volume day. We did actually get some decent moves intraday, but let's start off by looking at the bottom of the barrel here. Crypto, not looking so good. Again, after this merge happened with Ethereum, there's more and more talk track circling saying that, you know what, there may actually be a securities tag slapped on Ethereum, meaning that the SEC will look at Ethereum as a security, and all of a sudden markets are freaking out a little bit, more than usual, I guess. But we are right back near those lows. 18,935 is where Bitcoin is at today. That's a drop of 2.8%, and I guess I can get rid of all of these old previous boxes because we've really just been channeling back and forth between 18,000 and 24. Now, I know that's a 6,000 point swing, which is certainly plenty of move there to capitalize on, but we keep smacking against the bottom here at 18,000. This is very important because if that 18,000 level breaks, we're probably going to fall very quickly. I am targeting, well, there's two targets I've got on here. The first one is 13.5, which is kind of this area back in October of 2020 where we went sideways and then ripped up. And then the next one's going to be 10,000. I know that's a long ways away, and I certainly don't want it to get there, but that is just simply what the charts are starting to show me. And we'll have to wait and see if we break down below that 18.3. But not looking good for crypto. Crude oil, a little bit of a slide today as well, continuing that downtrend. Even though we seem to get these nice moves up, it just keeps on pressing to the south side. So crude oil was down 1.27%, finishing at 84.28 per barrel. Indexes not faring so well. You had Russell 2000 down 1.15%. Nothing really technical. I actually expected this to be more of a condensed range. When I look at the ETFs, you'll see that a lot of this happened in the pre-market, in the after-hours session. So the charts for the index ETFs don't look like this at all, and I'll show those in just a second. But S&P 500 down 1%. You can see closing lower than where it was on yesterday's open, so not exactly the most bullish piece out there. Dow was down 0.92%. All of them, you know, kind of for intraday trading purposes, we're relatively flat. Here's your NASDAQ down 0.68, and your best performer was gold down 0.29%. But check out the ETFs here, and this goes back to our discussion about order routing today. Notice the spinning top formation when I look at the QQQs, right? Basically open and close right around the exact same price that it opened. Small topping tail, small bottoming tail. This actually, if you are a technician, this is a bullish harami. And I know you have two green candles, and it should be a down red one and a green up one, but it still reflects that after this slide, there's indecision and a good potential and possibility for an upside. Now, all bets are off, in my opinion, with regards to trading these candlestick patterns because it's not about the price point anymore. It's all about the Fed. And as I can see here, quite a few of you making comments at that point. Lori saying, I'm going to go paint pottery tomorrow. No trading until after the Fed report. Absolutely. And I saw Skilled Stocksman said, or you said something about that, Skilled, as well. You're like, I am not trading anything. There we go. Ain't doing nothing till tomorrow until well after the Fed. And that's probably the safest thing to do is stay on the sidelines and just leave it alone because we can all have our theories and our ideas about where these markets are going to go. But honestly, we have no sway over it whatsoever. We could be totally blindsided, or it could be exactly what we thought. And even if those two outcomes do happen, we get the polar opposites, right? Totally blindsided, and they raise 500 basis points tomorrow, or they do absolutely nothing, or they do exactly what they're expected. We just don't know what the market's going to react to that, or how they're going to digest that. So the safest bet, stay on the sidelines. So, I wanted to share that because you look at these charts like the S&P 500 here, and it looks like this gigantic red candle. When I look at SPY. You're going, wait a minute, it's just this tiny little spinning top formation. Why is that? A lot of that has to do with after-hours session and order routing. So that will be the topic du jour. And as usual, the topics come from, it's right, Jimmy, it's almost Oktoberfest. I can't wait. It's, the topic was sent in from one of the viewers out there. I will read your question and give you props for sending it in. Sarah says, I could use your help. I bought QQQ yesterday at 191. I put a stop loss at 190. Today I was stopped out at 288.48. Why did this happen? Well, it happened because of your stop loss. That's the easiest answer I can give you. My guess is you probably put a stop market on that one. So let me do a couple things here. Number one, let's go look at the QQQs. And I'll show you on a 5-minute time frame what happens. So here is today's trading. I'll put a big vertical line on the market close, so you guys can see exactly where the market closed yesterday and where it opened up today. That is going to be right here. Right? That's vertical blue line represents the opening of today. Now I'm not showing after hours trading, so let's turn on regular hours trading. And I'm sorry, turn on extended hours trading. Now what you see is a shaded blue area and a shaded, I guess, gold area. That's after market close and then pre-market. And I'll put the lines on here. You mentioned three numbers. You mentioned, let me see, look over here, 191. So I will put I think you meant 291 on this one. It's got to be 291. There's no way you could stop that at 191. So it must have had a typo there, Sarah. So 191 or 291, and I'll put this one here at 290 because you said that was your stop loss. And then I will put the actual execution price of your trade just down below it. So I've got three horizontal lines here, and the last part was 288. What'd you say? 48. Okay. So here are your three numbers in horizontal lines reflecting what happened there. So you purchased on this top line. Yeah, I saw that, Lori. I'm pretty sure, Sarah, if you're trading the Qs, you didn't buy yesterday at 191. You bought it at 291, so you had a typo there. If you bought at 191 yesterday, I'd love to know who your broker is because you got a hell of a deal, and I would like to buy as much as humanly possible from them at that price, but let's assume it's 291. If you bought at 291, you bought somewhere right going into the close. So as I guess a mentor, I would kind of have to question you as to why were you buying right near the close yesterday, knowing this market uncertainty around the Fed announcement. That's a little crazy, but it is what it is. So regardless of why you purchased it, that's another show. You put a stop loss down here at 290, right? So you're losing whatever, $1 per share. I'll assume you have 100 shares, and that would be a $100 total loss. And you're wondering, why did you get filled at 288? Well, my guess is you probably put a stop market order in there. Now, you're probably thinking, why didn't it execute you here, right? Why didn't it execute in the after-hour session? Well, market orders do not work in after-hour session, right? Market orders do not work in pre-market. They do not work in after-hours. Limit orders do work, and you may have been able to get out using a limit order, but we'll get to that here in just a second when I pull out my drawing board and my drawing tools. But the main reason that you got filled at 288 is it looks like that was the first trade of the day. The first trade of the day, the open was 288.49. You got filled at 288.48, so a penny of slippage there, or the rush from the morning. You just got filled with the classic market order slippage, right? This is why you have to be careful setting market orders. You're thinking, oh, I'll get out at 290 no matter what. No, on gaps like this, you could get slipped all the time, and it could have been much, much worse. If this thing opened up down to, let's say, 275, well, you would have been filled at 275 because you're basically saying if it gets below 290, then I want you to do a market order and get me out. But because of gaps, you run into problems here. Now, if you were trading something like the NASDAQ futures, here's the 5-minute NASDAQ futures, you wouldn't have had this issue. Well, of course, the numbers don't quite line up, but you can tell it's much more continuous. There's a 24-hour aspect to this with a small window where the futures market is closed, and generally you don't get big gaps. So, I guess I got to draw here and show you what kind of happened there and what the problems are, what you could have done to potentially prevent this from happening and save yourself a little bit of grief. So let me add on a new slide over here. We'll make that a white background so I can draw for you. Okay. And there is my drawing board. All right, art class, let's begin. So here you are with your price chart moving up, right? And you said, I want to, here's my 290. All right, stop loss. Hey, Chris, good to see you. Stop is 291. Or sorry, I got them backwards. Damn it, 290. And then this bad boy up here was 291. So you defined your risk. Now, when you do a stop market, you're basically saying a condition. It says, at what price do you want me to get you out at? And you said 290. So the computer doesn't really care what price you get. It doesn't matter to the computer. Computer's saying, as soon as this thing trades at 290, I'm doing a sell market order. And in this case, it did a sell market order when the markets opened back up. Because remember, there was no pre-market trading. Now, how could you have prevented that? Well, you could do two things, right? In this case, you got filled at 288, whatever, I'll call it 288.50 for easy math. Basically, you lost another $1.50 per share than you had anticipated. That's not good, all right? That certainly blows out your risk-reward metrics, whatever that may have been, Sarah. I don't know how you're defining your reward or profit potential, but it blows your metrics completely out of the water. What you could have done is done a stop limit. And anybody who's wanting to use stop orders in the after-hour session for equities, you should probably make note of this. Stop market is never going to execute you in the after-hour session in equity markets. It won't do it. But you can do a stop limit. With a stop limit, you really have two variables. The first one is your stop, and then you have a limit price. So you have to insert two different items. And here's how it would work. Let's say you did a stop limit so your stop was the same, 290, right? So right now it's exactly the same as a market order. But the reason they don't allow market orders in the after-hour session is the markets have become very thin in the after-hour session, and you could suffer massive slippage. So the regulations have changed. Now what you can do is say, I will put a limit order that says 290. Now what this is telling the computer is, my stop loss is 290, but I'm not going to accept anything less than 290. So what you've done here, or what you could have done here, is protected yourself from that downside slippage, right? If it fell even more, well, you were still going to be long your shares. You would not have been stopped out. However, that's also the big risk of this, right? If I have this stop limit order and it prints very quickly and moves all of a sudden to 289.99 without filling me, I'm now stuck long and it's past my stop loss. That's just the difference between limits and markets. Low liquidity, lack exchanges to place order after market. That's definitely one of the major considerations. And honestly, it's people like me. I'll be brutally honest. It's people like me. So what I used to do, I think I've shown you this before. There's the bid and the ask columns, right? That's where the buyers line up and where the sellers line up. Well, during regular market hours on especially the heavily traded securities, there's a lot of volume, a lot of liquidity. So I could trade 1,000 shares or 10,000 and probably not move a market. But as soon as that bell rings, it's like Fred Flintstone going yabba dabba doo down the brontosaurus tail. He's flipping out of there. He's out of work, gone. Remember, market makers have a fiduciary obligation. Their job is to make a market. That's why they call it a market maker. However, those rules only apply to when the markets are open, which is 9:30 a.m. Eastern Standard Time till 4. So that's the only time market makers are on the hook. As soon as that clock bell rings on the exchanges and it's closed, they pull all their bids and offers, and liquidity disappears from that level 2 screen. What you're left with are people like me or those using automatic electronic communication networks. So let me see if I can draw you another picture here real quick, just for fun. So let me, I'll try to do it over here on the right-hand side. Yeah, I'll do it over here. So let's say I've got my bid. And here's your ask. And there's your levels, and let's say, you've got 290, 289, 287, 285, right? That's all the buyers lining up, highest ones at the top. I'm sorry it's at an angle. I'm just kind of contorted at the desk. So you got 291, 293, 294, 296, right? So let's assume that there's a lot of, I have no idea what I just did there, but that's kind of cool. Let's just assume that I have a stop order. During regular market hours, there's probably plenty of liquidity in each one of these. I have no idea what I just did, but now my cursor's all messed up. So there we go. Imagine there's a lot of liquidity at $290, $289. And in the equity markets, you guys do understand, it's not going to be $289. It'll be like $289.99 and then 98.7. It's just penny increments. But what happens is during regular market hours, you get all that liquidity. But as soon as this market closes, you're going to get a market that might look like this. All of a sudden, the inside market is now 290 by 296. So what was, a dollar spread is now a $6 spread. And I was the guy who would sit over here on the bid side and say, you know, I want to buy this security, but I want to buy it at $50. And there were a couple times back in the late 90s where I was like $100 out of the money with limit orders, and I was getting filled because somebody did a market sell order after hours. And all of a sudden, the buyers and sellers disappeared, and I got filled. It was one of those things like I felt kind of guilty, but then again, somebody made a stupid mistake. You never use a market in an illiquid market, a market order in an illiquid market. So the good thing about Sarah's trade there on QQQs that we just looked at was that you're in a very liquid security, right? QQQs, SPY, incredibly liquid. It's not like you're trading some penny stock that has no liquidity. So you're safe for doing that. However, it still suffers from low liquidity after hours, and I can show you that right now. Here's QQQ. Let's add on volume here, and you guys can see at the bottom, in this shaded blue area is after hours right now. Well, there was plenty of volume, huge volume spike right at the end. You had 173,000 shares of the QQQs change hands the last 5 minutes. And then immediately after that, it's down to 25. And right now, 834 shares of QQQ have traded hands in the last 5 minutes. Sorry, 625. So volume is gone. And imagine if I did a 1,000 share sell order right now, I'm going to move the market because liquidity is just not there. So two pieces on that, Sarah. Number one, you could have helped yourself and protected yourself and gotten out at potentially 290 by using a stop limit order. The stop market, it's just not going to work in after hour. So as traders trade, we'll hear limit, execute, next day, right? Yes, exactly, Chris. So that limit order, what happens is during the, let me just draw the chart here. So I've got to draw all over the place. That's for a lifetime. Oh, I don't know what you mean by that's for a lifetime. But let's just I'll draw a bar chart of 24 hours of trading, right? So here is the open, that's midnight. And then here is our 24 hours of trading, right? So this is 24 hours, 24HRS. Well, markets don't open till, let's say, 9:30 a.m. So markets open there. That's your open. And they trade for 6.5 hours. And let's call this, I'll move it over to here. And we'll say this is your close. Right? So that's your 4 p.m. and this is 9:30. And I'm generally speaking of equity markets here. Of course, some markets are slightly different. But basically, this big X here represents when the equity markets are open. If you're using a stop market order, the computer, your order routing algorithm knows it can only place it in the area that has this big red X. As soon as that market rings at 4 p.m., it's not going to look at this at all. It's no longer checking, doesn't care. All it's saying is, what time is it? Oh, wow, I didn't realize I could zoom in like this. It's kind of strange. Better learn the tools I work with. It doesn't know anything about price at this moment. It just says, hey, what time is it? Okay, I still can't send this order. The second that regular trading hours happen, meaning when that bell rings at 9:30 a.m. Eastern Standard Time, the first trade that goes through, orders are being processed in huge bunches. And that's immediately when this market order got executed. That's why, if we look at the QQQs here again, I have the vertical blue line right here, but right where you see that shaded box end and the white box and the white sky begins, that's when it opened up. And you just got filled in that opening batch. Notice how high the volume was in the morning. There are a lot of orders being filled at that time. So yes, the computer will just say, I'm holding on to it till regular market hours. As soon as that market opens up, the computer is saying, oh, price is below the stop loss, send a market order, done. Because now I can send one. If you had done a limit order, it may have worked as well. Now, let's look at three other things to pay note of here. Let me show you this chart right here. And you may notice on certain platforms, you have a variety of different order functionality, right? There's different types of orders that you can send. So let me write those out for you here, since I don't have my my keyboard all set up to type on the screen. I guess I could do that if I wanted. Okay, so there's really three main types that you're going to deal with. You're going to deal with GTC, all right? So we're going to go GTC. You're going to have a day, and then you're going to have plus orders, all right? Those are the three basic order types. I will show you the screen right now. There you go. So GTC says, let me make a little equals. I'll start with the day. Day is only valid during RTH, regular trading hours. That's it. So if you put a market limit order, whatever kind of order you want, and it says day as your order type, the second that bell rings, that order will get canceled. Done. GTC says good. My O is bad. Till cancel. And those will work. Not just in regular trading hours, but RTH plus ETH, extended trading hours. So that's your round the clock. So clearly what Sarah did is she had a GTC stop market, because if she did not have a GTC and she put that order in yesterday, it would not have executed today. If she did a day stop market order on her QQQs, then she would still be long QQQ because the order would have been canceled at the market close yesterday. Now, you can put here, actually, hold on. This is not correct. Take that back. Hold on. Merlin made a mistake. Mark your calendars, everybody. Merlin mistake. So GTC says only regular trading hours. So let me take that back. Sorry, I'm confusing you here. Yeah, I'll correct that one. So there's, yes, I think that depending on your order, you should always use GTC, but you really got to be, you just need to understand it. So GTC says during regular trading hours only, but you can have it there for weeks and months. The plus order says now, you can go into extended trading hours. That's what the plus order means. So what you can do is you could set, let's say you wanted to do an order that is just for today. Really easy, right? I'm just going to do a day order, right? That's canceled by the end of the day. If I want it to last today only plus, just go through today's after hours, I would use what's called a day plus order. That's going to go through the regular trading hours for today and then go through the after hour session up until midnight. That may depend on the broker you're using, but my experience, it cancels out at midnight. Now, if you wanted to, you could do a GTC order, which says, I'll put a stop out there, but I want it to stay open as long as possible, right? Until I tell it to cancel, that's going with a GTC. But that is only during regular trading hours. If you wanted to be valid in the after hours session, you could do a GTC plus. So there you go. Well, there you go, Margaret. You've been a member of this program, watched this show for a long, long time now, and you're still learning stuff. I love it. So yeah, and I guess it's worth mentioning because, as I mentioned in the write-up for the show, there's so many facets and areas to trading that we need to focus on. There's so many, you've got your technical analysis, you got your fundamentals, you have just the ability to read price charts and human behavior, you have the psychology behind it. Platforms themselves can be very daunting, but what most people, I think, overlook is order routing, right? And I'm hoping that you guys can see that there is a utility to a GTC order. There is utility to a day order, and then there's huge utility to add that little plus function on there so that you can now be trading in the extended hours or extended trading hour session. Yeah, I actually do most of mine will be GTC plus. But remember, if it's a market order, it won't execute in the after hour session anyway. But if you do a stop limit, it will. So very, very important for you. Can you set a stop limit price range? Example, stop. Yes. Great question. Great question, Rob. So let me draw another picture here. Oh, I gotta love my cheesy artwork that I do for you guys. Luckily, I have a little drawing board, but I'm just not really good with it. I'm very poor with it, actually. But let's scroll you down to here, and let's do that same example that Sarah had, right? So Sarah was long, let's just say 100 QQQ at 291. And she says, I want to stop at 290. Right? So my maximum risk here is $1. However, we already explained the reasons why this order did not get accepted in the after hours session when it actually traded down through 290. What you could have done is Sarah could say, all right, I'm going to do a stop limit, and I'm going to do a stop limit with a GTC plus order. So that's like the order would be set up on the order entry bar. And from that, she could say the stop was 290 That's the trigger. That's what the computer says, okay, we've hit 290, now what? What this says is because you've hit 290, you're now going to do a limit order, and now what's the limit price? What I could do is I could do 285, or any number really. And what that says is I'm now accepting 5 points worth of slippage. I'm allowing the market to move down a little bit, but what I don't want to have happen is all of a sudden, I have a market order or something and I get filled at 210, right? That's just crazy, insane slippage. Probably not going to happen with the Qs, but I think you get my point. It's you can put a little bit of a range or a limit of slippage that you're willing to tolerate on that specific trade. So great question. Oh, I'm sorry. I did all this wonderful drawing and I didn't share my screen. Thanks, Eric. Oh, man. Sometimes I get so wrapped up in what I'm doing. I apologize. I'll wait for the screen to come back up. Yes, Mario. GTC works on futures outside of regular trading hours as well. There isn't a plus order for futures market because the futures market is 24 hours inherently. So there you go, Eric. Thank you for saying show me the screen. There's visually what I was just explaining. So I got the top, Sarah, long 100 shares of QQQ at 291, stop loss at 290, and she's thinking, I'm only risking $1 here. But down below that, I wrote how that order may have been used to protect her and also offer a little bit of slippage, stop limit with the GTC plus order. You have to put in two variables when you do that. The stop order was at 290. In this case, I just wrote the limit of 285 per, Rob says, can you do it 289.50? Sure. I could absolutely change this and make this 289.50. But yes, you can make it pretty much whatever you want. 289.50. And now what I'm saying is I'm allowing it to slip me 50 cents extra. Just a little bit of extra, slippage there. And that might be fine for you. What it does is it prevents you from the catastrophic gaps. However, it's a double-edged sword, right? Because in the example for today, it didn't work in Sarah's favor. So here's the chart of it, right? She got filled at 288.50, so she got filled right here. At one point, she was like loving it, right? Because the Qs were all the way down to a low today of 286. So it was down another $2 past where you got stopped out. Of course, when it rallied back up to 291 today, you were probably cursing the market, right? That's just the nature of the beast with these stop orders. Anyway, I hope that gave a clear enough explanation of stop orders, GTCs. There are a whole bunch of different order routes that you can use, but I'm not going to go into that today. We do have a wide variety of electronic communication networks you can be using to route your orders through, but that's not as critical, in my opinion, today as understanding order routing, like what are GTC, day plus orders, day orders, and those types of things. Now, you can take this one step further by using bracket orders or OCOs, right? And a bracket order would simply be where Sarah, instead of buying something yesterday and saying, I'm just going to put the stop loss at 290, it now allows you to put a target as well or multiple targets. You can add huge levels of complexity to that should you choose. But that's a whole another ball game. GTC, right? Regular trading hours only. Correct. GTC by itself will only be regular market hours. Now remember, if you're trading futures, it's different because there is no closure of the market in futures. Right? There's that one window where they roll over, but that's a small little gap of time. That's not a big deal. With the equity markets are actually closed more than they're open, right? We're open for 6.5 hours a day. Well, we got 24 hours. That means they're closed a lot longer. So these orders can have some good value to you if you are looking at maybe trading or utilizing that after hours or pre-market trading session. Cool. Yeah, good for you, Margaret. It makes it much less. Margaret says, I always use bracket orders. Good for you. I think that relieves a lot of stress, a lot of fingernail biting and worrying. If something's gonna happen, you go, I already have the trade all set up. Here's my entry. Here's my stop loss. So I know what I should lose maximum, and then here's my target. So you can relax, kick back, and do what you got to do, and let the market do its thing. I'm a big fan of bracket orders. I think they're very important. All right, if you guys have any other questions on order routing, let me know. Send them on in. I'm going to go now into today's market, and then I'll go look at the economic calendar as well as some other good stuff. So I used to trade stocks, but years ago, Bob Dunn's live class and Nat Natick, Massachusetts, forever changed my view, and I trade futures and look to invest in stocks, change each other. Yeah, Chris, I think for me as well, I am predominantly futures, equities, and options. But again, I can't trade options without understanding the equity markets. I like futures, but I'm starting to like the consistency that I'm getting with options a little bit better. But to each their own, right? It's just to find something that works for you, and if it's working and making you the money that you want, that you've said this is what I need to get, then go for it. All right, let's look at economic data real quick, and then I'll go to some listener questions. This was a surprise to me. I really did not expect this. You guys might remember my talk track yesterday saying, look, housing starts. I just see the housing market slowing down, and I don't see people building new homes right now. Well, lo and behold, not only did we not drop, which I was expecting, we actually came out with a significant increase, and I don't know why that is. Of course, you have to trust the data, but the previous number was 1.4 million. They were expecting 1.45 million, and then we came out at 1.58 million. So 180,000 more new homes being built. Now, maybe those are multifamily units and planning on rentals being the big issue, but you would think that housing starts would be declining because of what's been going on in the past couple months with real estate. You also had building permits decline, so that is, to me, building permits is not as significant as housing starts. Building permits dropped from 1.69 million to 1.52, which is worse than expectations, and that pretty much sums it up. What was interesting for Canada, by the way, since I know we have some neighbors to the north here, is the CPI numbers came out showing a contraction. So we had that here. Right, we had CPI numbers slowly declining, actually got down to 0, and now all of a sudden it looks like people are, you heard Joe Biden say on 60 Minutes that the pandemic's done and inflation, yeah, it's no problem. Well, it's still a problem, but the good news is it's not accelerating, it's pausing its overall growth by having a contraction. Well, in Canada, you got that same basic principle. You have a negative 0.3%, which means that for the month of, I'm assuming that's going to be August, their prices actually declined a little bit. It doesn't mean they're done with inflation. It just means that it's slowing down. We'll have to see what that trend is. So that was some good news there. Kevin, one of our regulars, usually doesn't watch live, but he always likes to chat. So thanks, Kevin, for the feedback you always give me. He says, but what's the relevance of the Fed funds rate being higher than inflation? Isn't it irrelevant if inflation is still high and above the target? Yes. So I don't know from an economics perspective, like if I go to Keynesian or Austrian economics, does it have a huge relevance on it? No. What I was going off of was historical norms. And going back, I don't have the chart readily available here, but going back like 40 years, 50 years, maybe in 60 years, we always had the Fed funds rate above inflation. It just was the norm, and those were normal markets that were functioning. And all of a sudden, as a trader, or I guess as just an analyst, really, I'm looking for things that are broken or disconnected that don't match up with history. And that's what we have right now. We have a situation where the Fed funds rate was pegged at 0 and inflation was, 8-9%. So they've had these really aggressive pops to the upside to catch up. And at some point, we'll probably go back to the historical norm, which is the Fed funds rate will be above the rate of inflation. Now, what economic mechanism does that provide? I believe that's what you're asking me, Kevin. And I'll be honest, I just don't know. I don't know what's the relevance of it. I just know that's what it has always been historically. And when it inverses, where all of a sudden inflation is much higher than the Fed funds rate, that's all of a sudden where markets seem to go into a chaos or a significant sell-off or situation like that, which is where we are headed right now. So that's the only rationale I can give you there, Kevin. Unfortunately, beyond my scope of analysis on macroeconomics. You got the whole market with the S&P or NASDAQ rather than individual stocks. Way less. Yeah, I know some of you guys are huge futures fans, and you can argue either market. But one of the best things about futures market, number one, is the 24-hour trading aspect. Number two is the 60/40 tax treatment, which is great. Those 1256 contracts make it very, very appealing from a capital gains perspective. Plus, no wash sale. They're designed to be trading vehicles, so you don't have to worry about a lot of the qualifying as a trader conditions that you need to meet for other asset classes. However, using options on some of these major market indexes, like I've been doing, which is pretty much all the spiders, the XLE, XLF, XLY, XLU, all those. Using options on that is great. It's just you're stuck with regular market hours. So with that, I think futures does have the huge upper hand on that one. All right, last question. I have to get out of here early. I got a meeting at 3:00 sharp, and I got to go prepare for that one. NJ, who's probably here with us today. I think I saw you commenting earlier on. What do you think is an appropriate account size to enjoy those 1% returns, but with a cushion to cover the exercise stock price if you end up owning them? I'm getting that option strategy. You gotta have money to make more money. Yeah. So that one, obviously, when you look at someone who's got a $10,000 account, let's say you got a $10,000 account and you're like, okay, well, I'm going to implement that 1% strategy. Great. It's going to make you $100 a month. That's not, the money's not there. For me, the 1% strategy, the way I'm approaching it is this is when you have a mass of capital and you're saying, I want to put that in at least the least risky position possible, but I also want to make sure I'm generating consistent income streams from that. So the goal for me for the past few years has been to get an account that's big enough to offset all of my income from all my sources. And now you're looking at a much bigger amount. So let's say you had $1 million, right? If you got $1 million and you just get to that 1% strategy, which actually this year I've exceeded that every month for that account that I showed you guys on the show. I'm getting 2 to 2.5% right now. If you got 1% on a $1 million account, well, that's 10 grand a month. And that's also in a situation where I'm not taking huge risks, right? I'm going with very diversified ETFs. I'm not trading the high flyers, though I did show you Bed Bath & Beyond. That was not in my 1% account. That was in a speculation account. But most of them are done with diversified ETFs that are not going to have a 50% gap down and absolutely hose me. Generally, I'm selling them in a short enough period of time that it doesn't allow them to get that far away from my strike price if I am executed. So to your question there, NJ, you need to have a lot of money in your account to make that 1% approach work and continue to grow it. My trading accounts are probably different than many of yours. I don't pull money out of my trading accounts. I leave it in there and I grow it and I try to compound it, and I might move it to another type of trading account, but I don't pull any of it out for day-to-day expenses, which is very different from what a lot of people are doing. But I don't know if I could say, what's a typical account size. What I would say is make sure that whatever account size you're trading, that you have enough cash to cover the position of your exercise. So let's say, for example, let's go over here and I'll come up with some easy numbers. Let's go to a daily here, the QQQs. Let me find something that's going to be more appealing. So let's go to our ETFs here. So you can see right here, I've got IYR, right? So IYR. Oops, IYR. So here's IYR. Whew. Real estate tanking. Look at that. That is a beautiful down move. I'm being extremely sarcastic. That's pretty damn ugly. So here's IYR. And let's say I decided to sell some puts and I'm going 87, right? So there's 87. And it's pretty darn close, but you get the point here. And let's say I have a $100,000 account. Just making that second assumption. I got a $100,000 account here. If I sell those $87 puts, I have to be able to buy $8,700. I have to have $8,700 in cash because each contract is 100 shares. So $87 times 100 is $8,700. So if I trade one contract, I know I have enough in my account to absorb $8,700. Now, how many contracts could I buy total? Well, if I had a $100,000 account without needing to put in margin money, let's go 100,000. Divide that by 8,700. Oops, that was times. How about divide by 8,700? I could buy 11 and a half contracts. So I could sell. In this case, I could sell 11 contracts of IYR at 87 and collect that premium. Now, how much premium totally depends on which strike price or what my time frame is. But that's how I would approach this, NJ. Saying, do I have enough money to purchase those shares outright if I'm exercised? If I am, okay. Just making sure it's the level I'm comfortable at. I personally would not be selling IYR for October at 87. It's just too close. Maybe I'll go out for the week and collect some nice premium there. But I'm going to always do it with the amount knowing that I can afford to buy the shares outright if it's put to me. I think that answered the question, I hope. All right, I got all kinds of questions coming in here for me. How often do you check your options using the 1% strategy? Well, Margaret, I know the numbers because I'm looking at the market every single day. So I know the numbers in my head. I know where I stand. So I don't log into the accounts and look at the P&L. There's no point. There's nothing really I'm going to do there. But I'll be looking at my positions all the time. Like for example, right now I'm in a very interesting position. I have 7 weekly puts that I just sold a week ago and got some really good premium on the QQQs. Those are 288. So tomorrow is going to be really interesting. I have a limit order right now to sell, to buy back my, I'll show you here. Let's just get some of these lines off here, and I'll show you what's going on with my QQQ trade. So my options expire tomorrow, the 21st, right? So I got these options right here, and I'm at 288. Notice where we are right now. I'll put this little horizontal blue line here, call it 288. So right now, my options are going to expire worthless. I sold the puts, which means if it closes tomorrow below 288, I'm going to own those shares. I'll be honest, I don't want those shares. So I actually have a limit order to buy back my QQQ puts tomorrow at $1. And what I'm expecting is, I'm expecting a huge volatile swing tomorrow, and I'm hoping that during that real crazy rip up or down, that I'll get taken out and I'll buy them back for $1. And therefore, make a good chunk of change and not be open to the risk, hopefully before the Fed makes their announcement. But we'll see. I might close out earlier, depending on what happens tomorrow. Most likely it's going to be a quiet morning up until the FOMC announcement, which I'll mention here in just a second. What else I got? I would think you would trade SPX options because of your account size, just like Tom does. Yeah, I could. I like looking at I like trading all the different instruments. I like trading the XLF, and right now I'm long puts on XLF and XLE. I'm going after specific market segments based off supply and demand zones. But you can always do SPX. That makes it much simpler when you're just focusing on one. They're still getting a price for new construction. Okay. So the last 4 Fed hikes, the market was green by 2.58%. Yeah. Note half of those days reversed and paired gains the next day. Yeah, it's just unknown, Chris. You can look at the statistics and it says all that, but I just don't trust it. I don't trust that market tomorrow. So hopefully I'll get out of those QQQ puts tomorrow, even though my order is good. So let me see. I got this last question from Rob here. My stop limit never filled during regular hours because the price moved too quickly through price. Has that ever happened to you? Yes. Yes. And that's the risk of a limit. So during regular market hours, Rob, I'm going to use market. I'll use a stop market. Now, if you just absolutely want to use a limit order, then use a stop limit, but allow for a few cents worth of slippage, right? Because if it's something that's somewhat thinly traded, you could have a very quick move and it goes right through your level. You don't get executed and you're still holding long because now it's below your limit price. So yes, that has happened to me many times in the past. Absolutely. What are the odds the rate hike is already priced in and the market bounces tomorrow 50-50? It should already be priced in. Personally, I think that the rate hike is priced in, but the question is what rate hike? If we go out to the Fed funds futures, which is really where, in my opinion, where you get the most solid opinion because that's real money. Oops, there we go. See, I'm doing my research for my graphics. We're an 82% chance we're going to get 75 basis points tomorrow. So to me, the market is priced in this 82%. Although I'm hearing more and more the expectation of a 1%. Like just get it out of the way is what people are thinking, right? Get the 1% out of the way and then worry about it next month. So if they raise 1%, you'll probably have a pretty steep decline tomorrow. If they raise just 75 basis points, you probably get wild swings back and forth. My guess is the market will probably rally a little bit. But then again, it really depends on what Jerome Powell says at the end of the day at the press conference. So let me look at that one real quick. Here is the economic analysis for tomorrow so I can wrap this up. Up at the top there, we've got existing home sales at 7 a.m. Pacific time. That's expected to decline. No shock there. I'm hearing that sellers right now are scrambling to get out of homes, which does not surprise me. Now you'll probably see a lot more supply come on the marketplace. Prices are dropping. Bonds are rising, making mortgages more expensive. So it's kind of a perfect storm for a down housing market right now. And we'll get some evidence of that from that existing home sales tomorrow. You scroll down there a little bit, you can see we've got crude oil inventories for the U.S., but really everything is focusing on that 11 a.m. Eastern Standard. This is Eastern Standard Time. So 11 a.m. Eastern Standard Time projections. That will be when they actually come out with the rate announcement. That's a big one. Right now, you can see they're expected to jump 75 basis points to 3.25. However, that 11:31, be careful. 30 minutes after. So you're going to get crazy whipsaws for 30 minutes. Big moves up, big moves down, and there's this opportunity there, but it's just really a lot of risk that I would encourage you not to participate in. At 11:30, I will be watching the Jerome Powell press conference and seeing what his statements are, what his objectives are, what have they been talking about, what do you think about inflation. So this is probably more important. Right now, I expect a 75 basis point increase. I wish they would do 50. That's what I would do, but I'm not running the show. And then see what they say at this press conference about the markets going forward. Now, tomorrow, you also have a tentative announcement from Bank of Japan, although it's tentative, which means we don't actually get a solid time on when they're making their rate announcement. Remember, Bank of Japan, negative 0.1 is where they are at. And I gave you the example yesterday, the carry trade right now between the USD JPY is 2.5% plus 0.1. Right now, it's 2.6. As of tomorrow at 11 o'clock Eastern Standard Time, that carry trade is going to be now worth 3.35%. That's a significant increase of 75 basis points. So you could see the dollar pop tomorrow and move up. I'll look at the dollar here real quick before I wrap up. Here is the Dixie, another nice green candle for the dollar index, but notice we've been kind of smacking our head against this 110.50 mark. We'll see if we pop up above that one on tomorrow's action if they do, in fact, raise 75 basis points or maybe even more. All right, I think that's going to do it for me. I hope you guys learned something today. I know that there was a lot of comments coming through, and I want to kind of continue to go to those, but I got to get downstairs and get ready for another meeting. So tomorrow we're going to have David Warner on the program. We're going to talk about, obviously, interest rates, what went on in the Fed. We'll talk about his love of the British pound, which I don't think he has love for the British pound anymore because it's been nothing but a beautiful downtrend. But we'll see what David Warner's checking out, what markets look like to him in the spot Forex world. And then, of course, Bill Addis will be on Thursday, cocktails on Friday, and then we go into the weekend. So I hope you guys enjoyed that. If you guys have any comments, questions, feedback, or topics you want me to go over for tomorrow, you can always send those in at TraderMerlin@gmail.com or put them down below the YouTube video. I did get a couple of those, and I want to get more questions there so I can incorporate them in the program. Again, here's Sarah's question. Thank you, Sarah, for that one. I appreciate that. I hope you enjoyed order routing and learned a bit more about how these markets actually work. Take care, everybody. I will see you all on tomorrow's show.